Hi everyone. Now I want to discuss with you one problem related to admission of a partner. So here already in the previous class I discussed with you all the pro formas in preparation of all accounts related to admission of partner, and here I am going to solve one problem and let us go and discuss that. So this is a question. This is one question that I have taken, and here first of all let me discuss the question because understanding question is very important to do the solution. Okay, so this is a problem actually related to admission of a partner, and as you know already this is 20 marks problem for intermediate commerce students in second year, and this is useful for BCom students also, and this is useful for chartered accountant students also. It is one of the chapter admission of a partner in partnership, so it will be useful for all the accounting students. Okay, let us discuss the problem. So here if you look into the question, Amar and Akbar. So Amar and Akbar, two are partners here. Okay, Amar and Akbar, two partners are there. I will show that. So Amar, Akbar, there are two partners and they are doing partnership business, and they are sharing profits and losses in the ratio of 4:3. So that ratio is very important because whenever we want to distribute anything for old partners, we have to distribute in that ratio. Here it is 4:3. So total is 7. 4 plus 3 7. For first person we are going to give 4/7, and for second one we are going to distribute as 3/7. Okay, so next the balance sheet is given on 31st March 2020. So liabilities are there and assets are there, and some liabilities are given here under liabilities and some assets are given under assets, and the information which is given down under that balance sheet, that is very important. We should see who is a new partner, who is going to be admitted into the partnership business of Amar and Akbar, how much capital he is bringing. So we should know all this. Here you can see on the above date, Anthony, so new partner is Anthony, he was admitted into partnership firm for 1/4 share in the future profits. On the following conditions, some conditions are there at the time of admission. First one is Anthony should bring 35,000 towards capital. So Anthony is a new partner, he has to bring some amount of capital. Here he is bringing 35,000 as his capital, and 28,000 towards goodwill. He is also bringing goodwill in the form of cash. So in this problem, new partner is bringing capital as well as goodwill, both. Next, after that, the information whatever will be given in the question, that is related to assets and liabilities and provision for doubtful debts. So those we will take in the first account in solution in revaluation account. Okay, so we have to see what actually they have given here. Land, second point, B point is land to be valued at rupees 20,000. So at the time of admission they revalue all assets and liabilities. Here they are valuing the land at 20,000 rupees. So present value of the land is 20,000. We should check with the old value, then we can decide whether the value is increasing or decreasing. So here land value in the balance sheet, how much we have? 15,000. So 15,000 is a old value. Now they are valuing at 20,000. So 20,000 is a new value. Here land value is increasing by 5,000 rupees. Okay, that is asset increase. We should record in revaluation account credit side. Okay, next machinery. C point is machinery. Machinery is valued at 23,000. Present value of machinery is 23,000. Let us check with the old value. Old value of machinery. Machinery is that is 25,000. Okay, present value is 23,000 students. Old value is 25,000. The value which is given in the balance sheet is old value. Okay, we should see the value which is given down in the information. So old value is 25,000 and new value is 23,000. you only can notice the differences. Old is 25,000, new value is 23,000. So asset value came down, decreasing. Okay, so we should record that 2,000 rupees decrease in revaluation account debit side. Next, D point. Stock be depreciated by 10%. Stock is asset. You can see they have given under assets only, stock. So stock is an asset. Old value of stock is 24,000. Okay. But here we need not to compare old and new because new value is not given in the information. What they said, stock to be depreciated. Depreciated means decreasing. Appreciated means increase. So here clearly they said that stock is going to be decreased. So depreciation is how much? 10%. Stock is asset. If asset is decreasing, we will record in revaluation account debit side and we will calculate 10% on the value of stock which is given in the balance sheet. So 24,000 into 10 by 100, 2,400 we will record. Okay, hope this is clear. Next one, provide for bad debts. Provide for bad debts means this is PDD. So PDD always we record whenever they are providing or creating, we record in the revaluation account on the debit side. 1300 we record. If percentage is given, we calculate that percentage on debtors. But here they did not give percentage, they have given amount. So we record 1300. Hope this is clear, students. So what they said here, pass necessary journal entries, ledger accounts and give the balance sheet of the firm. Let us first prepare all accounts. Okay, so later on you can write the journal entries. Let us go to first account. What is the first account that we are going to prepare? We are going to prepare first account as a revaluation account. You already know that. Okay, I explained in the previous lecture. If anyone did not watch the previous lecture, first you watch that. All the formats I explained there, you watch that and next come to this class, then only you will understand. Okay, so first account is revaluation account. So in revaluation account we record all assets, liabilities, increase, decrease and PDD. So we should check the question. Whatever changes are there for assets and liabilities in our question, those we will write in revaluation account. So if you observe here, B point, from B point you can see. Okay, from B point onwards. Okay, what is a B point here? B point is land to be valued at 20,000. So land valued, present value is 20,000. What is the old value of the land? It is 15,000. Old value of the land is 15,000. Okay, so present value is 20,000, old value is 15,000. Now it is it is increasing by 5,000 rupees. Land is asset. Okay, they have given under assets land. So land is asset and the value of asset is increasing by 5,000. Where we will write in revaluation? If it is increasing, we will write on credit side, students. Okay, whenever asset value increases, we write on the credit side. So land, buy land. Whenever we record on credit side, we should use the word buy land. Okay, it is increasing. So how much? 20,000 is present value minus 15,000 is the old value. So how much we are getting now? 5,000. 5,000 we can record on the credit side. Why we are writing on the credit side? Because whenever asset value increases, we write on the credit side only. Okay, so next one. Next is C point, you can see. So if you check the C point is what? Machinery valued at 23,000. So machinery value is how much here? Machinery value is 23,000. Present value is 23,000. Okay, and what is the old value of machinery? It is 25,000. Old value is 25,000. Present value is 23,000. It is decreasing by how much amount? 2,000. So we are going to record that 2,000 rupees decrease in the account, in revaluation account. So asset decrease always we show on the debit side of the revaluation account. Okay, let us record on the debit side. 2, that is what? That is machinery. Okay, machinery. So we will write to machinery account. Machinery account. You can write machinery also, no problem, machinery. So it is how much? 25,000 minus 23,000. We are going to get how much here? We are going to get 2,000. Okay, is it clear? Next one, D point. You can say D point, stock be depreciated by 10%. So stock value we have to depreciate. Depreciate means decrease. Stock we are going to decrease. Okay, so how much percentage? Actually percentage is given here, students. So what is the percentage of stock? 10%. So we should decrease the stock by 10%. What is the stock value given in the balance sheet? It is 24,000. Okay, so 24,000 into 10, we have to 10% we should calculate. First of all, you should know which side we should record in revaluation account. Stock, asset, depreciated means decrease. Asset decrease always we write on debit side. Okay, so on 24,000 we should calculate 10%. Let us record here. 2 stock So how much it is? 24,000 only, no? Okay, 24,000 into 10 by 100. Let us record here. 24,000 into 10 by 100. Okay, how much we get? 2,400. We should record here 2,400. Okay, and next item. Next item in the question is, that is provide for bad debts. You can see, students, here E point. Provide for bad debts. Okay, so how much they are asking us to provide? Provide for bad debts is 1,300. So they only have given amount, so we will take that amount only, but you should know where we should write. Provide, creation, raising bad debts, we should always record in revaluation account debit side. Let us write in revaluation account debit side. Okay, 2 we will write PDD. PDD means it is nothing but provision for doubtful debts. Okay, so it is how much? They only have given value, no? 1,300. We will record 1,300 only. Let us go to question. So all the items whatever we need to write, that we recorded in the revaluation account. Let us do totals of revaluation account now. Now check the total, students. Debit side we have 3 items. So total is 2,000 plus 2,400. 2,000 plus 2,400, 4,400. Okay, and plus 1,300. How much we get? 5,700 we get on the debit side. And credit side, how much we have? Only one value we have, that is 5,000. Okay, so debit side amount is 5,700, credit side amount is 5,000. More amount we should record in totals both the sides. So more is how much? 5,700. Let us write 5,700 both the sides in totals. Okay, always more we should write both the sides in totals while balancing. And less amount is on credit side. Come to credit side, and here we are going to record the answer in revaluation account. So if we get less balance on credit side, that is called revaluation loss. So it may be, if we get debit side, that is profit. It may be profit or loss, both should be distributed to old partners. Okay, what we should write here? By old partners capital account. Okay, so what it is? It is what, students? It is profit. So mention in the brackets that it is profit, and we should record how much. From 5,700 you deduct 5,000, you get how much? 700. That is profit, but you should distribute that profit to old partners. Who are old partners in our problem? Amar and Akbar. We should distribute in 4:3 ratio. So let us write here. First for Amar, Amar is equal to 700 is a loss. We are going to distribute to him in what ratio? 4/7. Okay, how much we get? We get 700 into 4 by 7. We get 400. Okay, so 400 we write here. And next person is Akbar. Akbar. Okay, Akbar is equal to, what is the amount here? 700. And let us distribute that 700 in what ratio? 3 by 7. So how much we get? 300 we get. You can calculate it. You calculate it so that you will understand that. Okay, hope this is clear, students. So in this way we should distribute to partners. And for inter students, calculators are not allowed, students. Be careful, you have to calculate manually. Okay, so 700 into 4 by 7 you do. You will get 400. Akbar, 700 into 3 by 7 you will get 300. Actually this is answer. Profit is answer. I'll change the color of that so that you will understand that. Okay, so we are getting loss here. That is not profit, that is loss. So I'll change the color of that. Okay, so next, this is how we prepare revaluation account. Let us go to next account. Next account is general reserve account. So first of all you should decide whether to prepare this or not. Okay, so if you want to prepare, what you have to look for, and if you don't want to prepare, why? Okay, so you should know that point. Actually you should check the question, students. In question you should look into liabilities side. Okay, on the liabilities side, if you find any reserve, general reserve or reserve fund, then you can prepare that account, and that reserve you can distribute to old partners. So let us check here on liabilities side. Do we have any reserve? We have general reserve here. Okay, so general reserve is there. How much? 14,000 rupees. So let us prepare that account. If it is not there, then don't prepare that account. Now here in this problem we have it. Let us prepare that account. Okay, so general reserve account. This is a format. Always you have to follow the format. Okay, first in this account we should write on the credit side, by balance brought down. Whenever you write brought down, you should bring the amount from the question balance sheet. So what is the general reserve amount here? 14,000. Let us record that 14,000 here. Okay, by balance brought down 14,000, and this 14,000 we should distribute to old partners on the debit side. So debit side to old partners capital account. Okay, so how much we should write in the amount column? We should write in the amount column same amount, 14,000, and totals also both the sides we should write 14,000, 14,000. And here 14,000 we should distribute to partners. What are the names of our partners in our problem? Amar and Akbar. Okay, so let us write Amar is equal to 14,000, and what is the ratio that we should take here? 4 by 7. Okay, we should distribute in this way. So 14,000 into 4 by 7. How much we get? 8,000 we get. Okay, 8,000 we should write, we should distribute here for Amar. And next person is Akbar. Okay, we should distribute for Akbar also. He is also one of the old partner. Okay, Akbar is equal to how much reserve we have? 14,000, and into what is the ratio for him? 3 by 7. Okay, if we distribute in that ratio, how much we get? You have to calculate, students. 14,000 into 3 by 7. So we will get 6,000 ma. And you should once check 8,000 plus 6,000. Are you getting 14,000? Yes. Okay, then that is fine. Hope this is clear. Okay, so this is how we prepare general reserve account. Let us go to next account. Next account is new partners capital account. Definitely in case of admission we will have new partner. Who is that new partner? We should see how much capital he is bringing, that we should take into account, and we should record here. So let us check the question. Here new partner is Anthony, and how much capital he is bringing? 35,000. You can see A point, students. You can take the amount from that. Okay, 35,000 capital he is bringing. Let us go and record there. First we should record on credit side only by cash account. This is a format, we have to follow the formats. Okay, so by cash account, how much he is bringing here? He is bringing 35,000 capital. So let us record 35,000 here. By cash account 35,000. Okay, and debits totals also, both the sides we will get 35,000, 35,000. And next debit side amount is less, so we will write to balance carried down. Okay, already it is written here, so we should write 35,000 here. That's all. Okay, this is how we prepare new partners capital account. Very simple. If you know the formats, easily you can prepare that account. Okay, learn the format so that you can fill the values here. Easily you can get marks. Let us go to next account. Next account is old partners capital account. So this is a format of old partners capital account. Whatever we have in the question, that we are going to write here. If anything is not available, we will remove that. Okay, but you have to remember the format. First we should write on the credit side, students. In our question, how many old partners are there? 2 are there, Amar and Akbar. Okay, so we are preparing old partners capital account. So how much capitals already they have in the business, that will be recorded here first on credit side in the place of by balance brought down. So from where we can get these capitals? From the balance sheet in the question. Okay, they will give here, you can see capitals, liability side, last item, capitals, Amar capital 40,000 and Akbar capital is 30,000. Okay, you can take these two values and you can record there. By balance brought down, Amar capital is 40,000, Akbar capital is 30,000. So we will write here 40,000 and here 30,000. And before that we should change the names of those. Okay, so Amar and here Akbar, and here also we will change Amar and Akbar. Okay, so next item is credit side by revaluation account profit. So we only prepared revaluation account. In revaluation account, if you get profit, you write here on the credit side in this account. If you get loss there, you have to write in this account to revaluation account loss. Okay, if you get profit there, you write on credit side here. If you get loss there, you write on debit side here. Hope this is clear, students. And let us see what we actually ascertained. This is loss, students, sorry. So this is not profit, this is loss. If you get anything on the credit side, that is known as loss. If you get balance on the debit side, that is profit, students. Okay, so note that point. If balance you get in revaluation account on credit side, that is loss. If you get on debit side, that is profit, students. Okay, so this is loss, 700 loss, and we distributed 400 and 300. We should take that. For Amar 400, for Akbar 300. Let us go and record there. So we are not going to write on the credit side because profit is not there. It is what? It is loss. We will remove this item. Okay. And revaluation account loss. How much we have? 400 and 300. So we distributed in that way. Okay. And next one. And in the balance general reserve, students, next item is what? General reserve. Do we have general reserve in the question? We have, and we prepared general reserve account also. In that account, how we distributed that reserve to Amar and Akbar, that will be taken here. Let us see that. So general reserve, how we distributed? 8,000 and 8,000 for Amar and Akbar 6,000. Let us write that only here. So by general reserve account 8,000 and for Akbar 6,000. Okay, and next goodwill. Goodwill, if we have goodwill in the question, we should distribute here. So goodwill is there. Okay, new partner is bringing goodwill. You can see A point after capital 28,000 towards goodwill. Okay, so goodwill is there. So we will write here and we will distribute to old partners by goodwill account. So we should distribute, students, for these two persons. Okay, what is the goodwill amount? You can see here 28,000. Let us distribute that. First we will distribute for Amar. So 28,000. How we will write 28,000 into 4 by 7? Okay. How much we get actually? 16,000 we get. So we should distribute that here. 28,000 into 4 by 7. Okay. You should distribute like that. Wait a minute, students. I will just a little bit more we want, because calculation is there. Wait a while. Okay, so this is how we do calculation. And next we will calculate for next person also. Next person is Akbar. So for Akbar, how much we will give? 28,000 into 3 by 7. Okay, so we will get 12,000, students. So 12,000, how we will get here? You should show the calculation. 28,000 into 3 by 7. Okay, you should show the calculation in that way. So this is how we distribute goodwill to both the partners. Next item is by P&L account, liability side. If we have P&L in the question on liability side, we should write here and we should distribute for the old partners. But in the question we don't have that. If we have an asset side P&L in the question, then we should write here in this account on the debit side and we should distribute. Let us check whether we have or not. You check the asset side. Do we have P&L account, profit and loss account? We don't have, so no need of writing there. And do we have on liability side? Check it once. We don't have there also. If you have, then you should compulsorily write it and you should distribute to old partners. We don't have, so I am removing this. Okay, so I will remove this. Both the sides I am removing. Hope this is clear. Now we have credit side some items and debit side only one item. Let us do totals. All items we recorded. So credit side, first Amar total. Let us add all these Amar values, whatever are there for Amar. What we have? 40,000 plus 8,000 plus 16,000. Okay, total is 64,000. You compare with the debit side. Credit side Amar column total is 64,000. Debit side only 400. Which total is more? Credit side total only is more. So both the sides in total you write more amount. 64,000 you write. Both the sides for Amar. Okay, 64,000 you write. And debit side, from 64,000 you deduct 400, students. So how much you will get? 63,600. Okay, you can write that here. To balance carried down. To balance carried down is 63,600. Okay, and next let us do totals for Akbar also. Akbar totals are credit side 30,000, 6,000 and 12,000. Let us do totals of that. 30,000 plus 6,000 plus 12,000. So if you add all these three values, you will get 48,000 and you compare with the debit side Akbar column. That only 300 is there. So which side amount is more? Credit side. So that is 48,000. So both the sides in totals we should write 48,000, 48,000. Okay. So both the sides in totals. Whichever amount is more, that only are going to be recorded. 48,000 both the sides. And debit side, from 48,000 you deduct 300 rupees. Okay, how much we get if we deduct 300? We get 47,700. You write for two balance carry down. 47,700. Okay, so this is how we prepare old partners capital account. Hope this is clear, students. So let us move to next account. Next account is cash account. So cash account format is this. You have to learn the formats. Already I explained in the previous lecture all the formats. Same formats, you have to keep it in your mind and take the values from the question and record. So cash account we are going to prepare. First, debit side to balance brought down. So balance brought down means we have to take from the question balance sheet whatever cash is appearing in the balance sheet asset set, that should be taken. Let us see how much we have there. This is a question, how much cash we have here. You can see, students, cash 5,000 rupees. So let us take 5,000 there. Okay, can you observe this? Cash 5,000. Cash 5,000 we have. Okay, so let us take that in cash account first. To balance brought down 5,000. Okay, that's finished. Next item is to new partners capital account. So how much capital new partner is going to bring, that should be recorded. Already we know how much capital he is bringing. So you can see here he is bringing 35,000 towards capital. Anthony is a new partner. He is bringing 35,000 as capital and 28,000 as goodwill. Okay, let us take those two here in cash account. Okay, two new partners capital account. 35,000 I am writing here because that much capital is bringing. Next, to goodwill account. When new partner brings goodwill in cash. So if new partner brings goodwill in the form of cash, then only you record here in this account on the debit side to goodwill account. Otherwise don't record it. Okay, so in this problem, new partner Anthony is bringing goodwill also. So you can write here how much he is bringing. 28,000. Let us write 28,000. So all three items we recorded. Okay, now let us total it. So 5,000 plus 35,000 plus 28,000, we will get how much? 68,000. Debit side only it will be more. Okay, always. So 68,000 we record both the sides in total, students. And credit side by balance carried on we record because we are balancing this account. I think everyone know how to balance it. Less side we should write that amount. Okay, credit side no other item, only balance carried on means that we are balancing. Debit side three items are there, credit side no item. So 68,000 we are getting on debit side. Let us record both the sides 68,000, and credit side we will get 68,000 and we will record it as by balance carried on. Okay, hope this is clear. And let us go to next account. Next account is goodwill account. So in goodwill account, first we should write on credit side by cash account. When we will write? When new partner brings goodwill in cash. So in our problem, new partner is bringing goodwill in the form of cash. Let us record here, and how much goodwill is bringing? 28,000. Let us write 28,000 here. Okay, and debit side we should distribute the 28,000 to old partners by writing to old partners capital account. Okay, and what are the old partners names? Amar. And for Amar, how we distributed? Already we distributed, you can see here. We distributed goodwill for Amar and Akbar 28,000. 4 into 4 by 7, 16,000 we are getting for Amar and 12,000 for Akbar. We will write same amounts here. Okay, 16,000, and for Akbar how much for Akbar? 12,000. Let us write 12,000 here for Akbar. Okay, so you need not to calculate again because already it is there. Now both the sides totals will be 28,000, 28,000. Okay, so if you know the formats, this is very simple to do the solution. And after this we are going to do balance sheet. So whenever you want to prepare balance sheet, you should take the help of the question as well as here changes, okay, and whatever account we prepared, we should take some values from there. So first of all, let us go to question and let us see the question. So here, whatever items are there on liabilities and assets side, same we are going to take along with changes. What is the first item here? Sundry creditors on the liabilities side, 20,000. There is no change, okay, in sundry creditors because we did not take in revaluation account, and if any changes are there for any items, they will give in the additional information down. Okay, they did not give anything for sundry creditors, so let us record that only. It is how much? 20,000. Let us record sundry creditors. Sundry creditors, how much it is? 20,000. Okay, let us record that only, 20,000. That's all. One item is finished. Let us go to next item. Next item is, that is outstanding expenses, students, on liability side, 5,000. So no change. They did not give down related to outstanding expenses any information. Let us write same thing. Outstanding expenses 5,000. And next one, next item is general reserve, students. General reserve account we prepared and we distributed that 14,000 general reserve to all partners. Now we don't have that reserve in the business. Don't write it in the new balance sheet. Okay, leave it. And next, capitals. So in the old balance sheet there were only two partners, Amar, Akbar, and they had 40,000 and 30,000 capitals, but now their capital account we prepared, all partners capital account, and we should take those values, two balance carried on values in the new balance sheet. Okay, and next, now we have new partner Anthony also. We should mention his capital also in the balance sheet. Okay, let us see how much capital old partners are having. So we came to old partners capital account. We should see two balance carried on. So how much he is having? Amar is having 63,600 and Akbar is having 47,700. These two we will take in the new balance sheet as their capitals, because we prepared their account. There are some changes. Okay, we added some items to some, we distributed something to all partners. So at last their capitals are this much. This should be shown in the new balance sheet along with the new partner capital. Okay, let us go there. So let me write capital. So capitals, how many partners capitals are there? 3 persons. Okay, first person name is Amar. Amar capital, just now we took from the old partners capital account, 63,600. 63,600. Okay, and next person is Akbar. Akbar capital also we have to take from the old partners capital account. Just now I have shown 47,700. And last person is Anthony. Anthony, how much capital he is bringing? 35,000. Okay, we prepared his capital account, so that is 35,000. So we recorded all these three. Let us go to next. Balance sheet, liability side, whatever items are given, all we recorded along with the changes. Let us go to asset side. First item is cash, students. That time in the old balance sheet they had 5,000 worth of cash. Now we prepared cash account, so we should take that value from the cash account, balance carried on value. Let us see how much we have in cash account as balance. Okay, so you can see here, by balance carried on 68,000. We should take that in the new balance sheet. Okay, let us take that cash 68,000. Okay, let us move to next item. Next item is bills receivable. Students, you see under asset, second item, bills receivable 12,000. So 12,000 we are going to record. Okay, so we are going to record 12,000, students. So 12,000 bills receivable. There are no changes for these bills receivable we will record as it is. Bills receivable amount column 12,000. Let us go to question again, asset side. Okay, next one is debtors 28,000. Always PDD if we have in revaluation account, then that should be deducted from debtors. So we recorded in revaluation account PDD. Okay, debtors 28,000 students, and PDD how much we recorded here? 1300. So we should take there. We should deduct from debtors. Let us write debtors so it is 28,000, and from that we are going to deduct the PDD students. Okay, so minus PDD is how much? PDD is equal to 1300. Okay, whatever we write in revaluation, that we will deduct. So 1300 you deduct from 28,000. So how much you will get, that you should see. Okay, how much you will get students? 28,000 minus 1300. Okay, so you will get 26,700. You record that in the amount column, 26,700. Hope this is clear. And let us go to next item. Whatever items are available in the question in the balance sheet, all should be taken. Next item is stock student. Stock that is 24,000. So stock we recorded in revaluation account. Actually stock value given here is 24,000, and in revaluation account we recorded on debit side because stock is reduced, depreciation is there. How much? 2,400. So we should deduct that 2,400 from 24,000 in the new balance sheet. If any asset is decreasing, we should deduct. If any asset is increasing, we should add. So stock is decreased. We recorded in revaluation account already. How much it is decreasing by? 2,400. We should record that 24,000 minus 2,400 in the new balance sheet. Let us go and record there. In the new balance sheet, stock inside we write first. Okay, how much? 24,000. And what we will do? We will deduct. How much we are going to deduct? We are going to deduct. So directly we will deduct. Instead of writing decrease and all, we will deduct directly. Okay, so 24,000 minus 2,400. You can deduct directly. So how much we will get? You can calculate it, students. Okay, you can calculate and you can write 24,000 minus 2,400. It is 21,600. Let us go to next item. Next item is machinery. Machinery also. Machinery here how much we have? Machinery 25,000. You check the students here. Machinery 25,000 we have. And machinery we recorded already in revaluation account on debit side. Why we recorded? Because machinery is decrease. Machinery is decreasing. Okay, so machinery is decreasing by how much amount? 2,000. Let us show that change in the new balance sheet. We will record machinery here, and from 25,000 we deduct 2,000. We will get 23,000. Okay, machinery. And how much we have here? 25,000 minus 2,000. Okay, we are going to deduct it. How much we will get now? 23,000 we will put in the amount column. Okay, let us go to next item. Next item is land students. Land 15,000 is appearing in the old balance sheet, and that land also we recorded in revaluation account. So how much actually is appearing in the old balance sheet? 15,000 land. So we recorded in revaluation account on credit side. Why we recorded? Because there is a increase in land. We recorded on credit side. If asset we record on credit side of revaluation account, what is the meaning of that? Asset is increasing. Okay, so 5,000 rupees. So that 5,000 is increasing. We should add in the new balance sheet to 15,000 rupees, because 15,000 is the old value of land, and now it is increasing by 5,000. We will add it and we will show that change in the new balance sheet. Okay, related to what? That is land. how much students? That is 15,000 old value of land, and since that is increasing, we are going to add. How much is increasing? 5,000. And if you add, how much we will get, students? We will get 20,000. 20,000 we record in the amount column. That is a new value of the land. Okay, changes we should write. Compulsorily we should write that. Now all changes we recorded here. Okay, so everything done. Everything we recorded. Now we have to total both the sides, liability side as well as asset side. Let me total that. You also total, students, along with me. First liability side, 20,000 plus 5,000 plus 63,600 plus 47,700 plus 35,000. So liability side total is 1,71,300. That is a liability side total. Go to asset side and do totals of assets also. 68,000 first one under assets, next 12,000 and plus 26,700 plus 21,600 plus 23,000 plus 20,000. Okay, what is the total of that? 1,71,300. So both the sides we should get same total in the new balance sheet. Okay, so in the new balance sheet we should get same total, students. Then only our answer is correct. Okay, so this is a new balance sheet. We should get same totals in the new balance sheet after preparing all accounts. Hope this is clear. Hope you all understood, and in the next class I will explain other problems also. Keep watching the channel. So I will show all accounts what I prepared, and we both I discussed with you, and we discussed. Let me show all the accounts what we prepared now. This is a question, students. Okay. This is a first account, revaluation account. Next, this one is general reserve account. Next, new partners capital account we prepared. Next, old partners capital accounts we prepared. After this, cash account we prepared. Next, goodwill account we prepared. And at last, seventh one is new balance sheet. Okay, new balance sheet also we prepared, and we got totals tallied. Both the sides totals are same. Hope this is clear. Keep watching the channel for more solutions. Like the video, share it and subscribe the channel. Thank you.